Today on this short webinar, we're here with Stéphane to share Crédit Agricole's perspective on the private capital market, share hot topics, and also tell you why you should visit us on our booth.
I'm Stéphane Barret, Head of Private Capital Services at CACEIS.
And I'm Arnaud Garel, Global Head of Private Equity and Real Estate Solutions at CACEIS.
So first of all, we have a meeting on Wednesday morning, 9:45, 10:45. We have a panel that is going to share with you the key impacts of inflation from a number of players, okay? They're going to draw their experience from what they've taken from COVID, what measures they took, and what they expect to put in place for their deal flow in their portfolio companies. But there are two very different crises. COVID was really a full stop of all goods and services on a global basis. Here we have a creeping financial crisis, which is looming because nobody knows what the exact cost of money is going to be. What are going to be the base interest rates that are going to be applied? This automatically has an impact on the financing of the leverage markets, which today, as you know quite well, are fairly tight, to say the least. This has an impact on deal flow. This has an impact on valuation. And as time goes by, this impact is going to transfer over to the real world. And you can see with the incredible numbers of inflation that we have not seen for decades across goods, across wages, across needs of energy. This is also going to have an impact on the margins of some of these companies, on their cash flows, and therefore on valuation. So all this is once again a moving environment after a 2021 year, which was a bumper year. I think the industry experienced a fantastic level of growth that had never deployed in the past, but it's clearly going to be a challenging moment. For this, we've managed to have the managing partners of Apollo, Permira, OTPP, Ontario Teachers Pension Plan, and Invest Industrial, who will share their insights, their experience, and their view of how they're going to deploy in 2023 and 2024.
The pandemic has created a large number of opportunities for asset managers. And so far, it's true to say that as a depository, we've seen so far no slowdown in new fund launches by our clients. 21, as Stéphane was saying, was a record year, both in terms of deal making, fundraising. Fundraising driven mainly by large cap managers raising ever larger funds, but also a significant number of first-time funds, emerging managers. I'll be actually moderating a panel on emerging managers on the Wednesday of the conference towards the end of the afternoon, so feel free to join us. 2022, and the coming months are shaping up to be considerably more challenging, as Stéphane said, on many levels: inflation, energy prices, war in Ukraine. Fund managers will have to focus and work on two areas: fundraising, which no doubt will become more challenging and take more time. It won't be uncommon to see even blue chip managers taking 12 to 18 months to fundraise. And of course, portfolio management and working hard on adapting their portfolio companies to these new macroeconomic conditions, including interest rates, cost of energy, raw materials, and managing supply chains in a more complex geopolitical environment. Now, let's move on to retailization, which is also a major trend of the current market. According to 2021, a survey by Ernst & Young, 73% of asset managers believe that retail investors should invest in private market. The reasons are quite simple, really. From an individual investor perspective, it's a very resilient asset class. It provides great opportunities of diversification, and it has demonstrated historical outperformance, which is extremely important in the context of volatility. From a GP perspective, well, it's fair to say that most of them have really been successful at raising vast amounts of money from institutional investors, but it's become more challenging in this area. It's challenging to do more in this segment. While on the other hand, the high net worth and retail individual market remains largely untapped by private markets. There are two challenges. First of all, on the regulation side, it's fair to say that providing retail access to such funds is challenging, but there is a work in progress, and let's see what the new LTIF2 regulation provides in terms of new tools to fund managers. The other challenges are operational. Just to mention a few of them: managing the assets versus liability distributing those funds, and also providing valuations to investors in a timely manner. For asset servicers like us, the real challenge, which we are currently working on, is to have our private capital teams working very closely with our listed market teams internally to build new combined operating models. But we've got very robust tools and great teams to do so. So we are confident.
So retailization and the access to retail markets is really going to be the next challenge for leading GPs across the globe. Let me explain to you in a quick few moments why. At the LP level, this has always been the key providers of funding going forward. As you've seen, 20 and 21 have experienced a fantastic growth on tech funds, tech opportunities, and a number of tech deals that have gone through. And so clearly what happens in that segment is that the latest transaction price fixes the price of the underlying asset. But as you've seen quite yourselves, there's been no liquidity in that market. It's just been going all the way up. And now that the capital markets, the public markets, have dropped quite significantly on the tech side, clearly leaves the LPs a bit overexposed to the alternative sector, thereby putting a constraint on the amount that they can allocate now to new funds or even to their existing clients. That's why for the industry, for the private equity industry, the infra industry, the alternative industry as a whole, they have to master the funding flow, which is expected to match the amounts that they have raised today, and they expect to do this on the retail segments. When you speak to leading fund providers, US leading fund providers, who are managing several hundred billions today, they expect to double that amount by 2030, and 100% of that coming from retail. So they're equipping themselves, they're gearing up with leading teams dedicated to accessing the various levels of public retail that are going to be interested. And why is retail interested in this? Well, quite easily, we're coming out of an era in which cash, as we all know, had a negative cost. And so the attraction of having an actual real return to your money is real for a lot of investors. And so clearly, this is going to attract a lot of attention. But that's not the only element which is key in terms of key going forward, is sustainability. For a long time, it was discussed of how do we put this in place. Today, it is not a nice to have, it is a must have. All the leading funds have dedicated teams working at the fund level and at the portfolio level. And that is the only way for them to access key investors going forward. We at CACEIS have a long-term track record of working in sustainability and ESG. We're one of the precursors of that segment in the industry, in the banking industry. We are a leading provider of financing, whether it be on the loan market or on the bond market, of sustainability financings. But we think now that we have to go a level beyond. Sustainability is not just a tick in the box and you have a number of KPIs and you tick the box and you think that you're going forward. That's not enough. And we can see it every day from the pressure that we're getting from younger generations. We need to go a step beyond. So for that, Crédit Agricole has put in place an advisory service to make sure that you and your portfolio companies match the expectations in the market and can benchmark their sustainability practices with those of the best in class, which is the only thing which is of matter to you as a GP or an LP going forward to your portfolio company. So come to Crédit Agricole. We're more than happy to share a wide experience and produce for you and your portfolio companies those kind of services going forward.
Stéphane, you're right. ESG has been a key topic for a while, and its awareness has risen since the COVID crisis, of course, but I would say it has even accelerated on the back of last summer's wave of fires, heat waves, and floods in various regions of the world. For us, CACEIS, as a depository bank, but also as part of Crédit Agricole, it's very important to partner with asset managers that have a very strong ESG commitment to their LPs and who want to surround themselves with service providers who share this commitment. As an example, CACEIS was awarded the Platinum EcoVadis label in 2020, which makes us part of the top 1% most sustainable company in terms of CSR out of 60,000 companies evaluated. But it's not just about labels. Let's take another example. As part of our equity bridge financing activity, we recently took a very strong commitment to direct a majority of all new financings to our clients exclusively to funds labeled Article 8 and 9 under the SFDR regime, which is a commitment that we are happy to take and which will increase over the years to come. And as another example, you mentioned it, Stéphane, we work very closely with Crédit Agricole CIB and LCL in providing ESG-linked fund financing facilities to our clients, and we expect the majority of our book to be ESG linked in the next 2-3 years, most likely. Let's now move on to how Crédit Agricole is putting together the various teams to serve the asset managers.
Absolutely. So the way it works is a very simple approach. We've taken a holistic approach to the GPs and as a client base. Okay, when we understand and we have a discussion with a GP, clearly we will look at to encompassing its entire needs. It's going to be fundraising, so then we can put them in relationship with Amundi, with Predica, with Indosuez, with other leading providers. Even we have a dedicated sleeve to retail investors now, which is being put in place. We will then help him at the custodian, which is clearly a step which is required. They have to choose the right custodian, the right location, addressing the right needs, evaluation, practice, follow-up, all these real-time data, and they want to make sure that that works well. And so we make sure that with our partners, we give them a full service. And then once that fund is established and we do the first closes with Arnaud and his team at LCL, we will do these famous subscription facilities, and we will put them in place at first close, allowing the team to start working as soon as their first close is announced, giving them the funding to require to get going. Then the investment bank kicks in with clearly the leverage finance, the project finance, energy transition, aviation, rail, all these kind of dedicated tools to funding transaction companies and portfolio companies get in place. Same thing for the advisory service, and this is on a global basis, okay? Giving you the best of the deal flow going forward. As these companies grow, they make further acquisitions, they do refinancings, they do bolt-on acquisitions. All these are stories that you all know quite well. And then we come to the moment in which the exit comes around. At exit, what happens, us, CACEIS, we start looking for liquidity opportunities, whether it be in the public capital markets, whether it be with trade and industry players, or would it be with other financial sponsors. And we give the best advice to our clients, what is the best way to provide liquidity to their investment and their portfolio. Maybe they should keep it. As you know, and Arnaud knows, there's been a recent trend of continuation funds. Why? Because the industry is so competitive today. Why would you sell a company which is doing so well? Why don't you keep it? And so we've seen an increase in continuation funds, thereby allocating to put in a dedicated fund a limited number of portfolio companies, which you can share with your existing LPs, most often also with new LPs, to make sure that you're done on an even keel in terms of valuation, and you take it to the next level. Okay? All this is a circle of virtuous circle of funding and presence of the various entities. And that's where you see also the other entities come in. I mentioned earlier Crédit Agricole Leasing and Factoring. Clearly, it's a key financial tool coming into the financing of the portfolio companies for leasing and for factoring large entities across Europe. We can do pan-European factoring services. LCL does the same thing, more at a mid-cap level, but clearly mid-caps today are going to be our big clients tomorrow. So this is a virtuous circle coming in. And the final point comes in is carry. GP financing, carry financing, all these are key elements that you are all considering of what to do. Should you open the equity of your GP? We've seen a few trends coming up and a few players are coming in. We think there's also an alternative route, which is to provide liquidity in the form of a loan, a dedicated loan to that GP. We can finance your partners, we can finance the younger members of your partnership, even though they're in the midst of growing. They still have a house loan, they're a growing family, they don't have money to dedicate to these kind of investment. We at Crédit Agricole can find the right tools to help them be an investor and with a full financing package. That's how we see this cohesive approach of filière private equity or the private equity services at Crédit Agricole. And I'm very pleased to have done this with my partner, Arnaud, who one of my first partners 5 or 6 years ago. 6 years ago.
6 years ago already.
We built a private capital services group. And honestly, we are extremely pleased of the way it's been going.
Indeed, Stéphane, and you've said it all. So we are fully integrated, and I think in Europe, clearly, Crédit Agricole Group has one of the most comprehensive suite of services and products to provide to its private equity clients, based on this unique model of having all the various entities of the group working together in a very cohesive manner to bring you the best of Crédit Agricole. So we are delighted to have all these entities with us at the conference, and we'll be delighted to make all the relevant introductions for you guys.